Welcome to our first video blog here at Making Sense of It All. We look forward to doing more and informing you on how we go about investing, our thought process, and what goes into our thought process here as far as picking stocks is concerned. First, let me say that I'm Michael Needleman. For those of you who don't know me, thank you for taking time to watch this. Second, a little bit about our firm. I'm with Fusion Analytics. Fusion Analytics is a fee-based advisory firm. In turn, we've got 15 advisors with about $450 million of assets. As a partner here, my responsibility is to manage the internal money management operation and to grow that operation. I, on a daily basis, manage a long-short strategy. I have done that since 2012, January. The performance of the strategy since we started to manage it has outperformed the long-short index by over 3,000 basis points. In terms of what we'd like to talk about today, as far as stocks and the market, one thing in particular that we'd like to talk about today is new highs. On Friday, what we saw was a very large spike in new highs, and that is something that a number of technicians look for. The more new highs, the broader the market, or breadth of the market suggests that there's health in the market. For the past 5 months of this year, the number of new highs has been going down. As a matter of fact, it was dismal. In the beginning of May, it was below 135 new highs. Last Friday, the number of new highs went up to 1,146. That was a large spike up from the previous month, as well as the highest it's been since February of this year. Going all the way back to October of last year, where we clearly watched the number of new highs spike, that was over 1,600. We suggest that this is something that you take a look at. We are happy that there were a number of new highs on Friday. That said, this could be an anomaly, but it is something to watch on a regular basis. What we are also going to talk about during the course of this blog is a stock that we have an interest in and or own. Today we'd like to go over a name that we've held for quite some time, and the name of the company is Spansion. The symbol is CODE. Bought Code back in early January when the stock was approximately $15. We saw that the company was going through a transformation. And by the way, that's what we do here. We manage companies, we look for companies that are going through transformations in terms of how the street perceives the operation, as well as the current price and where we think that price can eventually go to. When we purchased Code back in February, we thought that there was a real opportunity for growth. The stock has really done very well in that short period of time. The stock currently is hitting a new high today at $21. Some of the rationale for the stock being up this high, first a tiny bit of background. Code is a $1.2 billion market cap. It is a semiconductor company. It is in the area of flash. The reasons why we got involved with it and still see an opportunity is last year they made an acquisition of Fujitsu plant and operating facility, and we thought that this was going to be an opportunity for them to improve overall margins. The company is starting to show this. In our opinion, this is in the early stage. Currently, the company has 36% margins. We think the margins of the company are going to go well north of 40, the mid-40s. We think they're going to do this by the utilization of their facilities, and that's going to take place over the course of the next 3 to 4 quarters, where you'll start to see capacity utilization going up. We also think what they did with this acquisition was they got out of a number of low commodity products, went to the higher end. Now industrial and automation is over 50% of the company. Those two areas have much higher margins. We also like that this company is a cash flow machine. We think over the course of the next year that you'll see huge cash flow generation, and that will either be put to use by a dividend policy and or debt repurchase and or the possibility of share repurchase. The last thing that people don't recognize about this company is that they have a huge IP portfolio, and that portfolio, in our opinion, is untapped. And there's a great deal of opportunity for them to monetize this portfolio. Typically during a quarter, this company has between $6 and $7 million of revenue coming from the IP. We think that that number can significantly go up. If and when that happens, the margins of that are extremely high, and we think that they will surprise the street. At the current price of $21, the stock is trading at about 16 times this year's numbers. Now, for a semiconductor stock, some people will say that's on the higher level. We think this company is going to get a higher multiple based upon what we think is getting out of a pure commodity play, going into a higher margin business, and we continue to think that this stock has upside. We'd like to leave you with is the following. This is our first video blog. We look forward to coming to you on a frequent basis to talk about stocks, to talk about ideas, about what we're thinking. In addition, if you have any questions or you'd like to contact us on the opportunity for investment in our long-short strategy or talk about your strategy as far as investments, please don't hesitate to give me an email at mneedleman@fusioninvest.com. We welcome any thoughts and input, and we look forward to coming to you on a regular basis. Thank you for watching.